Thanks for joining us today. Should be a great webinar on our favorite topic with our friends from HD Davis CPAs, Tim and Angela, on PPP.
So it's been a little while since we've done one of these for you all. We hope everyone's doing well and staying safe and pushing through this together. So today we've got some updates for you. We have, of course, the new stimulus package that came out, the new law, and it's got about 5,500 pages in it. So we're going to do our best to keep it as relevant as possible for all of you watching. We're mostly going to focus on the stimulus payments and the PPP because that seems to be the biggest area of concern for most of our clients and all of you who are watching. Although we are going to touch on some of these other things like the EIDL, some credits, and unemployment updates. So, it probably goes without saying, we're going to try and keep our questions to a minimum, but we want to address as many as we can as well. So, PPP, stimulus checks, we know you have a ton of questions on those particularly, and we'll try to keep things moving for you.
And I'll ask that I'll be kind of in the background here monitoring those Q&As with Jeff. If you guys have questions, ship them through via the chat in the Q&A section. We'll keep an eye on that. We'll try to answer some of them directly if we feel that it's something that is best to send to everybody or to pause or to jump in. We'll do that as well. So ship them in and we'll try to knock them down as you send them through.
Exactly. Thanks, Tim. So this law is including about $900 billion of relief. So this in front of you does not include every single thing. It's not going to add up to that. However, again, we just wanted to point out some key factors. It's not an all-encompassing list of this new law. So we do have some relief for small businesses, which includes the PPP. We have unemployment extensions and updates. Of course, we have round 2 of the stimulus checks. And then, of course, we have some other things going on like vaccines we need and some help for farmers and schools and things like that. But again, for purposes of the webinar, we're going to try and keep it to stimulus payments, PPP, and some other updates. Now, we all kind of know what round 1 entailed by now, right? It was based on 2019 taxes. 2018, if you didn't file, if you weren't required to file, there was that IRS non-filer tool that you had to use. So maybe you were less than the standard deduction or you don't have any income coming in on your end and you didn't have to file. That's that tool that you would use. Of course, you would have needed a social security number for everyone, including yourself, your spouse, any dependents on your return. Although in round 1, those claimed as a dependents on another return wouldn't be receiving a payment themselves. Payments were made through the end of last year. And then we knew that you would need to recalculate this on 2020 as a credit. So for round 1, if you didn't get it, you're going to include it as a credit. Remember that these stimulus payments are not taxable income to you. If you still haven't received your first stimulus payment and you are eligible, just claim it on 2020 taxes as this credit. And then just like any other credit that you would have, it's going to increase your tax refund or lower your tax due by the amount of the stimulus payments, whichever one would apply, round 1, round 2, or both. Maybe the IRS didn't have all of your information to figure this out. If you were eligible, maybe you owed child support for round 1 and it was garnished. However, that is not applicable to round 2. Your payments won't be garnished for past due amounts. And again, maybe you just didn't use that IRS non-filer tool by the cutoff date, which I believe was November. All of these things could apply to you. Maybe you're still eligible, you didn't get the payment, put it on your 2020 tax return as this credit. If in 2020 you had a child or you adopted a child, therefore that child was not listed on your tax return, you can also claim them on 2020 for both rounds. So 500 from the first round or 600 from the second, which we get into in a little bit. And of course, you're not going to get these payments twice, right? So no double dipping. If you received a direct deposit or a check through the mail, you're not going to also get the credit. You're just going to need that information to calculate if you get the credit or not. And to recap for round 1, again, we had some decreases for round 2, but round 1, individuals making less than $75,000 in AGI got $1,200 with, of course, a phase out. Married couples got $2,400 who made less than $150,000 per year with phase out. Head of household, $1,200 if you made less than $112,500 per year, and again a phase out. And then children under 17 got $500. So unfortunately, not everyone got that stimulus check. As we've seen, college kids didn't get this benefit the first round. If you're over 17, you would have only gotten a check if you filed on your own, independent of your parents. So again, this is all for round one. And now we're going to get into round two. Round two is generally the same. Most of it is going to be based on round one, how it was. The AGI thresholds and the payments amounts did change though. So again, it's going to be based on the same information. You need a social security number. Those claimed as a dependent won't be receiving the payment. These payments will be made through January 15th of 2021 via direct deposit, paper check, or this EIP card. The EIP card is an economic impact payment card. It's a prepaid debit card that the Treasury is using if you didn't provide information, banking information, basically. So if you didn't get this payment by, call it the end of January, then what you want to do is recalculate this payment on your 2020 tax return the same way like you would do round one via this recovery rebate credit. If you use the IRS non-filer tool for the first round, you're going to get the second round stimulus payment. You shouldn't have to do anything if you previously used that tool. The IRS will automatically send your payment. So again, non-filers could be if you are under that standard deduction, if you have no income, if you get Social Security benefits, things like that, and you had to go on the IRS website and do it by that deadline. You shouldn't have to do anything again. And some of us have already received this second round, but again, they're going to be issued through January 15th from the IRS. Now,
just to jump in real quick, this is the one part that we see as being relatively unusual based on historical tax filings is you're going to need to have the information about both of your stimulus checks, the one you potentially received in 2020 and the one you potentially received in 2021 this month when you go and prepare your 2020 income tax return. That 2021 information is not going to be used for 2021 taxes. It's going to be used for 2020 income taxes, which is odd, but in preparation of tax season, make sure that you are going to your tax preparer with your amounts of your stimulus checks that you got. That information does not get automatically sent to anyone. There is no automatic record keeping of those stimulus checks. So, as a tax preparer and as someone that oversees a lot of tax returns, that's something that's very new to our process this year. Is one of the first questions on our list with everybody is going to be, did you receive the stimulus checks and how much were they in both 2020 and 2021? So be careful. And it's just one thing that you can do to streamline and make sure that your tax return preparation goes extra smooth this year with the IRS, because it's going to be a fun year for a lot of other reasons. Make sure that you've got that information ready when you go get your taxes done.
Yep, and that's absolutely right. And I get into that a little bit later as well. But just to recover or just to recapture what round two is, you're going to have $600 for individuals with less than 75,000 in AGI. So these AGI thresholds are going to remain the same, but the phase out thresholds did change. Married couples will get $1,200 if you make less than 150,000 per year with a change in phase out. Okay, you could see that. And then head of household, if you file that, then you get $600 if you make less than 112,500 per year with a change in phase out. Children are going to get $600, which is a little bit different from the first round. Again, children age 17 and above and dependent adults won't be eligible for the second round, just like the first. Non-filers who receive the payment before registering a dependent child, if that child was born in 2020, can still receive this additional $600 payment by, again, filing a 2020 tax return listing that dependent. So as Tim said, everything for these rounds are going on your 2020 tax return filed in 2021. You will receive letters in the mail stating your stimulus payment. So if you have those, keep those. And like Tim said, just retain those, provide that to your accountant, make sure that you keep that record, because then that is going to help you prepare your taxes come this tax season. And again, just remember to be watchful for scams. Just should you get something in the mail that seems illegitimate, don't give your personal information out. The IRS is sending you things in the mail. They're not going to call you or email you or anything like that. So, you're eager to get your stimulus payment, but just be cautious as you're doing that. If you want some information, you could go to this website, the IRS website, get my payment for more updates and whatnot. You can check and see your status, although I do believe that they aren't going to have how much you're getting, but it will show if it's in process or not. So the January 15th deadline is the when they will stop issuing payments. And just to show you where this is going, so it's going on your 2020 taxes. It's going to be on page 2, line 30 right now. It's this recovery rebate credit. And it is a credit that, again, will increase your tax refund or lower the amount of tax you owe. We're not really sure if both of these are going to be in this line item right here together, or if maybe they'll be spelled out separately. We would anticipate they're all going to be on the one. And there's going to be worksheets involved to calculate that. So just know that it is there for 2020 for both rounds 1 and rounds 2. And if we need to address any Q&A, we can do so right now, Jeff and Tim.
We're all clear over here.
I show no questions at this time.
Wow, okay.
That's specific to your outstanding presentation skills. That's why there's...
Let's hope so. Let's hope that that's the case. All right, so we'll just move right into it. The PPP. We're going to, in this case, also go over the round 1 and round 2, just to help you kind of see the comparison. But pretty much by now, we all know what the PPP round 1 entailed. You received it. You might have even having your loan forgiven by now, or in the process of doing so. But just to recapture it, it is a maximum loan of $10 million for certain entities. It's essentially 2.5 of your monthly payroll costs from 2019 or the previous 12 months. There is a certain calculation for Schedule C people. It's generally for businesses with 500 or less employees, and that did, again, include sole props and eligible nonprofits. You won't have to start paying back the loan until after 10 months of the expiration of the covered period. So, penalties and interest and things like that will not happen until after that. 24-week period starts the date of the loan disbursement. Now, borrowers who received the loan before June 5th can elect either or. So you had that option, if you can remember. You had the 8-week or the 24-week covered period. You can also use this alternative covered period for only payroll, if you can recall that. And then, of course, you have to consider any reductions to forgiveness, so your FTE count and any salary or wage calculations that might apply to your business. So you basically have had to restore everything to levels prior to the pandemic. Now, and just so that you're all aware of this, round 1 has reopened with round 1 requirements. So if you didn't take this round 1 loan and you're a first-time borrower, you can take it now. They've opened it all back up for both rounds. So you would apply for round 1 using these round 1 requirements for first timers. If you already did round 1 and that's said and done, and now you're going into round 2, they've added that for those people as well. So just to clarify that, because I think that's important to understand, that round 1 people who are new to this have to abide by round 1 requirements. And then, of course, you have to file for forgiveness. So we have certain forms that you would use according to whatever your business entails. So Form 3508S, it's just a simple application, right? Borrowers can apply for forgiveness using this form only if the total PPP loan amount received was $50,000 or less. It requires fewer calculations, less documentation, and borrowers that use this form are exempt from reductions in forgiveness based on reductions in FTEs and salaries and wages. This form also does not require borrowers to show calculations used to determine their loan forgiveness amount, but the SBA might request this information. So in any case, if you're not required to provide the information, we advise you just to keep that information on record on your end. That way you cover yourself and you have that substantiation if needed. Form 3508EZ, it's basically an easier form. It's not the simple, but it's easier. And the instructions kind of show you who qualifies for that one. And then we have the Form 3508, which is if you don't fall in the other ones, then you got to file this one. It's the full-on form. If you can recall, it has the Schedule A, the Schedule A worksheet, that optional demographic form, and such and such. So again, if you don't qualify for the other ones, you'll have to file the full-on form. The lender has 60 days from receipt of a complete application to issue a decision to the SBA. And then the SBA then has 90 days after that to determine. So just keep all of that in mind for round one.
And a little bit of feedback from our department that has been submitting a lot of these forgiveness applications. Shameless plug, first and foremost, is that we've got our team here internally at HD Davis CPAs that have been overseeing a lot of these applications. They've done an amazing job in a short period of time submitting a ton of these. The banks have been really very good to work with. A lot of them have their own independent portals. We've been seeing a lot of these applications move along very quickly from the time that you submit to the time that you get the feedback back for the forgiveness itself. But most banks are not just requiring you to fill out this form and give it to them. Most banks have a specific portal that you go into. You fill out the form electronically, you upload your supporting documents, and things like that. It's great to make sure that you look at these forms closely before you go onto that online portal, because then you have a good idea what you're going to be required of. But so far, super impressive with all the banks and how they've been processing these forgiveness applications. So it has gone really, really smooth, especially after the rocky start that we had because of how fast they pushed out the initial loan applications. But the forgiveness part has gone really well.
Yeah, let's hope that that's the case for round two. So we've got round two now. There are some changes, okay? It's a maximum loan of $2 million, generally for businesses with 300 or less employees. It's 2.5 times your average monthly payroll costs from the 1 year prior to the loan or the calendar year. Now, entities in the accommodation and food service industries may receive a loan of 3.5 times their average monthly payroll costs. So if there are multiple locations, then must not employ more than 300 employees per physical location. And there is a waiver of affiliation rules to this, but you can only receive one second draw loan, okay? You have to have used or anticipate to use the full amount of the first loan before you receive the second draw. So this, it only applies if you got the first loan. And again, it allows for first-time borrowers, but you do have to abide by first-time rules if that's the case. You'll have to show at least a 25% reduction in gross receipts in either any quarter of 2020 relative to the same quarter in 2019, or all of 2020 relative to all of 2019. So if any of those apply to you and you're a second-time borrower, then you qualify. Companies with loans less than 150,000 will not have to prove revenue decrease at application. This doesn't mean that you don't have to have had that requirement. This just means that companies that fall within that category don't have to substantiate it. So just wanted to make that clarification. Tim, you go.
Yeah, this is an area that I've been having a lot of conversations with a lot of the different banks in town, and I think this is an area where you're going to see maybe some differences per bank. From what I'm hearing at this point, most banks are going to require some upfront certification of your decrease in revenue. We don't know necessarily what kind of certification, whether that might mean, financial statements, externally prepared financial statements, or just a simple Excel document that reflects that will tie into some substantiating document like an annual tax return or something like that. What I will tell you is, regardless of your loan size, I wouldn't even apply unless you have done this check of your revenue. Internally within our office, what we're doing is we're reaching out to everybody that applied in round one and seeing, will you qualify based on these metrics? We're going through, we're listing out their quarterly revenues. We're doing that comparison. So we have that information ready to go for them in their application. I would be prepared to prove your revenue decrease at application. You're not necessarily required to if you're under $150,000. But I think most of the banks will do that upfront due diligence to prevent, a mess later. So I know that that's what the rules say, but just in some of those conversations with the banking departments around town here, and based on the emails that they're sending out, I'd be prepared to prove that right out of the gate.
Yep. And then as far as gross receipts, that was another question that came up on our end. The SBA defines gross receipts as all revenue in whatever form received or accrued in accordance with the entity's accounting method from whatever source. So that includes sales of products or services, interest, dividends, rents, royalties, fees, or commissions, and then reduced by returns or allowances. So pretty much if you're a Schedule C filer, you can look to your gross income on your Schedule C. For everyone else, you're going to typically use total income plus your cost of goods sold, but it's not necessarily the case. And Tim, I don't know if you want to chime in a little bit on that part, because I know it gets tricky.
Yeah, here's where things get a little bit interesting on this application. Most of the stuff with this application is very straightforward. We'll show you the rules. We'll show you what the form looks like. It's pretty straightforward. But this part is where, in accounting, you'd think that everything's black and white, but there's a lot of subjective gray in our world. In defining gross receipts can be interesting. So what they've included is the option and or what seems to be the requirement to include your cost of goods sold in your calculation of revenue. And I'll tell you where that would be relevant. I'm going to use an example of somebody that's in the scrap business or in the metals business that had a relatively difficult year in 2020 because the price of metals was volatile in a consistently negative direction. So what happened there is that to maintain a lot of those higher margin or higher sales, lower margin industries, they had to sell a ton more just to maintain a similar gross profit in their business to keep paying their bills. So what this will allow for those industries to be able to do is to include cost of goods sold. So if your sales went up, you might look on the surface and say, I'm not going to qualify because my sales went up. But if your cost of goods sold went up more than proportionately along with your sales, and you effectively had less gross profit on those sales, then you're potentially going to qualify for round two, even though you had an increase in gross receipts, or maybe not a 25% decrease in gross receipts. So, and then conversely, on the other side of things, what I think it will do is it'll prevent people from, maybe playing games about their revenue and burying their revenue into cost of goods sold and showing a higher gross profit but a lower revenue amount. So I think that was a pretty solid little expansion of the definition of gross receipts by the traditional terms that will allow to accommodate some some industries that were negatively impacted, like those that are selling volatile materials, like lumber, people that are selling lumber, or people that are in the construction business that are historically bidding jobs at, normal, steady construction costs, but construction costs were going through the roof last year, all year long. So they may have had steady sales, but their gross profit was rapidly declining because they were locked in on prices that were 3 months old. So that's something just to be careful of when you're looking at things. Is most people that won't apply to and really won't have much impact on, because most businesses will have some steady gross profit and cost of goods sold percentages. So even if you include that cost of goods sold in your sales, it won't mean much. But for those of you that are in one of those industries that had some real negative cost of goods sold implications in 2020, you may want to look a little bit closer in the scenario where you don't initially think that you qualify.
Yep. And then in addition to all of that Tim said, of course, we will have some other calculations, just like the first round. So you want to make sure your FTEs and your salaries are good to go. And then for forgiveness, you want to use at least 60% for payroll purposes. So just like round one, you want to do that. You do have the option now, though, of using the 8-week covered period or 24-week covered period, whichever one you choose. We're not really sure if choosing a covered period will apply retroactively to loans made prior to the new law, but in any case, you have that option now. Borrowers that returned all or part of a previous PPP loan can reapply for the maximum amount available to them. And just, again, retain your records, employment records, at least for 4 years, and other records maybe for 3 years, just to cover yourself. So it's probably a little bit small on your screen, but just to give you the visual, you can see it looks pretty similar to the first round. This is the second draw borrower application form. And you'll just have to go through some basic information and again, calculate your monthly payroll. As you can see, it's 2.5 and then it gives that 3.5 exception for certain industries. And then you just kind of go through the form. And then, down at the bottom, you have to make some certifications, answer some of those questions just like you did round one. And of course, you got to show that you did have that decrease in sales. And just like the first round, you have this other page, you got to make some other certifications and initial. So you go through this. I'm sure you really can't read that, but it is available online if you wanted to. This is just to show you the idea of it. And then, you have the same thing on the next page. You're just going to initial it, put your signature and date on that, and you're good to go.
Well, the items that I would mention in regards to these certifications are, go back one more slide. There is the, let's see here, 1, 2, 3, 4. The second one, current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. What I would encourage everybody to do is to make sure that you feel comfortable that you're going to need the loan. Same story as in round one, is that you should have some economic uncertainty that you can hang your hat on to feel comfortable making this qualification. Because if you still had a very good year, or you made up for any of your decreases in any one quarter throughout the entire year, and you had a record-setting year overall, be careful when it comes to the ability to move some of your income around in quarters from accounting records and so on and so forth. Be careful. This is one of those things that's going to come down to your own perception of, do I need this money? Should I take this money? And if you don't feel like you should take the money, don't take the money. We don't know how much impact there will be 3 years down the road from audits or further investigation of need and things like that. So for most people, this doesn't matter. But for those handful of businesses that are on the line, and you might qualify because of some weird little blip in your quarterly revenue, just use common sense and use caution, because at the end of the day, you're signing and certifying that everything is true and that you needed the loan. And if it comes down to they're able to prove that you did not, you'll be looking at some trouble. So just be careful there, not to strike fear into anyone, but this is one of those areas that the government is certainly putting out a program that's going to be extremely helpful to a lot of people. There will be plenty of people that take advantage of it, I'm sure. But just be cautious that you're not being fraudulent or putting yourself in a position for a nightmare later.
Yes, thank you, Tim. And just so that you are aware, these loans will be made available through March of this year. So, as the first round, everybody was trying to get applied and get their money, but that isn't necessarily going to be the case this time around. So you do have some time. Just make sure you get your ducks in a row and then go ahead and apply. We do have a couple examples which I'll run through. So in this first example, company ABC took a round 1 PPP loan and used all of the funds. This company made $20,000 in sales in Q2 of 2019. This company made $15,000 in sales in Q2 of 2020, shows that reduction of at least 25% from Q2. So they are eligible for the second PPP loan. In this second example, we're taking another company. They didn't take the first round PPP loan. They are a seasonal business with less than 300 employees. They made $50,000 in sales in Q3 of 2019, and they did have the decrease in sales, but because they didn't take a PPP round 1 loan, they, as long as they met the other requirements of the round 1, then they are eligible for it's actually the first loan. So it's not technically the second, it's the second round, right? But they haven't received the first. So they are eligible for this additional, PPP loan. All right, so now we have some updates that pertain to both rounds, okay? So both round 1 and round 2. Eligible expenses now also include operation expenditures, property damage costs, supplier costs, and covered worker protection expenditures. Remember, just for the record, what utilities entails. That's electricity, gas, water, transportation, telephone, and internet services, but prior to February 15th of 2020. If you haven't already had your loan forgiven, you can use these new eligible costs as per the new law. So, following all the other requirements, this is the new part for both rounds. Another change is the tax treatment, and this is a big one. So expenses paid with the proceeds are tax deductible. The loan forgiven will be on the books shown as other income. On the tax return, the forgiven loan will be a permanent difference on the Schedule M1 as an adjustment for income on books not included on the tax return. No tax benefit shall be denied, and no loss carryovers or basis adjustment will be required as a result of a forgiven loan. And for pass-through entities, the forgiven portion will be considered tax-exempt income, resulting in an increase in basis of ownership interest. Biggest part, I think, is this: expenses are tax deductible. We do have some changes to the employee retention tax credit pertaining to the PPP, and we get into it a little bit later with this credit, but specifically regarding the PPP, businesses that receive a PPP loan are now allowed to take this credit, but the credit is not available for the wages paid with the proceeds of a forgiven portion of the PPP. So, again, if you can recall, the CARES Act had implemented a tax credit for wages to employees when business operations were affected by the pandemic. So now you can take this. If you took the PPP, you just can't use the same wages for both. No double dipping. Businesses can file amended payroll tax returns to claim this credit, so it is retroactive. Just a side note, if you want to take this credit and maximize everything for your PPP, you could use those other non-payroll costs for the forgiveness portion, maybe, including those new ones, and maybe the minimum for payroll, so that most of your payroll costs can qualify for this credit now. If you received a PPP loan in 2020 and paid qualified wages over the amount of the forgiven PPP loan and you are otherwise eligible to claim the credit, you can claim the credit retroactively. We'll just have to wait for further guidance as to how. but PPP borrowers can amend payroll tax returns for purposes of the PPP only. And again, make sure you're keeping records so that you can trace everything back to it and cover yourself. And another change for both rounds is the forgiveness. So if you did get that advance from the SBA, that Economic Injury Disaster Grant from the EIDL, that is not going to reduce forgiveness now. So we do have a little bit of time for Q&A, and then I'm going to go through the last part of our presentation. So maybe if we have a couple questions, Tim, Jeff.
Yep, we've got two. Caitlin asks, what if we weren't in business in 2019? So Kate, there's a handful of different things that may or may not apply to you. Is if you did not take round one, you can still apply for the round one payroll protection program loan. The rules are still the same. You don't have to show the revenue reductions. You don't have to show any of those items. But if you do not have comparative income for the 2 years, then at this point it looks like that you won't qualify for round two. So I'm sure that there will continue to be some clarifications there. But they're looking at comparative revenue calculations, and if you don't have the revenue to compare it to, then they will have to obviously make some adjustments to those definitions as they continue to go. Jack asks, how exactly do you suggest we show the 25% reduction in gross income? Quite honestly, I am having all of our clients fill in a spreadsheet that just shows their quarterly revenue amounts. And that can be done, however you keep your books. You could pull that from your QuickBooks reports. You could simply go in, if you're just a sole proprietor, you could go in and just add up your deposits for each quarter and compare them. What I'll tell people in general is that there is not the same mad dash for this money as there was in round one. There's a lot of money there. There are a ton of restrictions for people so that this will not be just blown through as fast as the first one. You got to remember when they extended the PPP program, the second go round in 2020, that money did not run out. So I do not envision that being the case for round two. So it's good to go through and do that due diligence. Yes, Jack, to your comment, a spreadsheet or anything like that is somewhat of a self-serving document. What I'll tell you is that most of the banks are going to put that on you. You are going to be the one that's going to sign your application, and you're going to be the one that's going to qualify under that protection of providing fraudulent information or incorrect information. So as best as you can, to know that you're going into that would be what I would tell you to be prepared with. There is no specific format. There's no specific audit requirement, and there likely will not be one. A lot of it's going to be that the bank is going to ask you to sign a piece of paper. So that way, if they do audit you and you were wrong, then you'll be facing penalties or, other penalties like that. A few people asked the same question. In calculating gross receipts for a quarter, do we include the PPP round one amount and the EIDL grant amount as gross receipts? No. I would continue, and I would always encourage everyone to continue monitoring the frequently asked questions on the SBA's website about this program. What they did last time was, as these questions came up, they were posting new frequently asked questions every day. So if you're concerned about some of those things and you don't have a clear answer and you want to wait on submitting your application until you do, I think if you've got plenty of time this go round to make sure that it's right and make sure that you're not signing off on a document that could potentially, cause you some fraud problems later. So take the time. If you've got concerns, work with your professionals, make sure that you're doing the things to protect yourselves for the future. One more quick one, Angela, our friend, the famous Youngstown legend, Jack Kravitz, to use the same financial institution for round 2 that used in round 1. At this point, we don't think that there's going to be any problem in using different institutions. We've kind of given some real consideration to that as we've been doing a lot of work with the former MedVac on Belmont Avenue. I'm sure that the banks will be fantastic to work with. But as an organization, we've been kind of kicking around the idea of doing them all in one spot, so it's a little bit more standardized. So at this point, no, I don't envision there'll be any issue there. I'm sure that it'll make it a little bit more complicated in your application because you'll have to certify that you got one and used the money. And if you're doing it with a different bank, you'll just have to have the right documentation to show, number one, that you got it, number two, that you used it. But again, if you've got good documentation, that shouldn't be much of an issue.
All right, so I think we'll just keep moving along, and then at the end, we'll take our final questions. We do have some updates to the EIDL. So if you can recall, this was that loan that came directly from the SBA. Well, the application deadline has been extended through December 31st of this year, of course, pending the availability of funds. So if you did need some more money to help out your business, you could go on SBA and apply for this loan. You do have some certain requirements, as you can see here. I won't spell those out, but they are the same as last time. Some other updates include the employee retention tax credit. So this is satisfied for any quarter of the first half of 2021 in which gross receipts are less than 80% of the same quarter in 2019, as opposed to 50%. So everything in red you could see here are changes. So, you know, this is again an extension of the credit that was available. The comparison to 2019 rather than 2020 kind of makes sense because gross receipts for 2019 will most likely be higher than 2020. I mean, that's not always the case, but eligibility would be easier to meet. If a business didn't exist at the beginning of the same quarter in 2019, then the same quarter in 2020 is substituted. The credit increased from 50% to 70% of qualified wages. It's effective January of this year and before July 1st of this year. The employee wage limitation changed to $10,000 per quarter, not per year. And the cap increased from $5,000 to $7,000 per employee for each quarters 1 and 2 of 2021. The threshold is now 500 employees or less instead of 100. And related companies sharing more than 50% common ownership can now take the credit. So employees of all affiliated companies are aggregated too. So we do have some changes to this credit, but it is still available. There's also this advance payment of the credit based on the 70% of average quarterly payroll for the same quarter in 2019. That is something that's new this time around. It would need to be reconciled against the actual credit like we do other credits. So if the amount of the actual credit is less than the amount of the advance payment, then you would need to repay the excess. Some other changes include, you know, it's allowed for hazardous duty pay increases for public colleges and universities, organizations whose principal purpose is providing medical or hospital care, and certain federal instrumentalities. And then we have some gross receipts defined for tax-exempt entities as well. Now, if you can recall, the FFCRA, it consisted of the Emergency Family and Medical Leave Expansion Act, or the EFMLEA, which expanded on the FMLA, and the Emergency Paid Sick Leave Act, or the EPSLA. And we talked about this also in prior webinars. There were exemptions for healthcare providers, emergency responders, and businesses with fewer than 50 employees if such requirements would jeopardize the business. So these credits are still available for the first quarter of 2021. However, there's no longer a legal obligation to provide the credit, provide the leave for the credit to employees beyond this December 30th, 2020. So if you're getting the credit, though, you might as well offer it because you have the option, but it's not an obligation this time around. So it's still available, but you don't have to provide this leave. It's not an obligation. If an employee used the 80 hours of emergency paid sick leave in 2020, then they cannot use it again in 2021. So the next slide is going to show you that comparison again. And this was gone over before. You probably are aware of it by now, but it gives you that comparison of the EFMLEA and the EPSLA, which I'm not going to get too much into. But just as a reminder, if an employee is not experiencing symptoms or hasn't been advised to telework, stay at home by their employer, they want to avoid getting the virus, they cannot elect to take the leave under either of these. If an employee has any paid personal sick, medical, or sick days, they can use those paid leaves during their unpaid leave. Part-time employees and employees who have varying work schedules may be eligible as well. But you can see the differences here. It depends on where you fall. So, if are you taking the EFMLEA or the EPSLA, which both fall under the FFCRA, which has been extended for this year.
So many letters.
I know. So much information to throw at you at once. So again, I'm going to just touch on this. Unemployment has also been extended. So the Pandemic Unemployment Assistance Program, that these were extra, if you will, unemployment perks that were being distributed at a state level. They're essentially federal dollars from both the CARES Act and the Consolidated Appropriations Act, which is the new law. So the PUA in general, it's just basically traditional unemployment to those who are self-employed. So the weekly amount of benefits available under the PUA will equal 100% of the covered individual's regular weekly compensation, and not less than $300 per week, as opposed to the $600 that it was. Eligible individuals will receive payments retroactive to December 27th of last year, and it has been extended by 11 weeks. So it expired of July of last year, but this unemployment program has been extended. And then we have the PEUC, some more letters for you, the Pandemic Emergency Unemployment Compensation. It's, again, basically an extension of benefits if you have used up your weeks in the time period. It is a reduced rate of $300 per week as opposed to the $600. And again, it's retroactive to December 27th of last year, extended of 11 weeks. So if you fall within this program, just know that there is this extension for you now. And then the FPUC, the Federal Pandemic Unemployment Compensation. It's a reduced rate, $300 per week as opposed to $600, retroactive to December 27th of last year, extended by 11 weeks. If you fall within this category, know that it's been extended. And once again, according to Ohio, the Ohio Department of Job and Family Services expects to be able to issue these payments by the third week in January for PUA claimants who previously were approved to receive up to 39 weeks of benefits. System programming will need to be system programming will be needed to apply the supplement for other claimants, and all claimants will receive all benefits they are eligible for retroactive as of early December 27th, 2020. So that's according to them, according to the website. I read that straight from that. This is a new program. So this mixed earner unemployment compensation program, it's for those who have both W-2 income and self-employment income or independent contractor earnings. So 1099ers. So you would use W-2s and 1099s, but whose benefit calculation may be artificially low by excluding self-employment. So this actually helps that. It's taking into account both of those, both wages and self-employment income, to help increase that benefit. We are waiting on further guidance as to how these will be administered, but this is a new program for those people who would qualify. It is effective until March 14th of 2021. And we have some employer benefits. So if you can recall, the Ohio's Shared Work Program, this has been extended. It extends 50% credits to reimbursing employers for traditional unemployment benefit charges. It extends federal payment of the first week of traditional unemployment benefits at 50% instead of 100%. and then some other requirements and waivers. And again, I'm not going to get into it. Ohio's shared work program, we did mention this back in April, but it allows employers to keep staff working rather than laying them off. So if that's the route that you've gone or want to go, that's here. Money was put into this program from a federal level just to try and minimize people being laid off. So you want to keep people employed and want to keep everything running smoothly. So that's what Ohio's shared work is. Feel free to look into that and know that we've got there's so many updates within this law, but we just want to try and relay that to you at least. And then a few other individual provisions. So eligible educators can take a $250 above the line deduction, and that includes PPE. So this definition is expanded by the IRS, but just know that, if you have PPE, you can use that if you are an educator and you want to take that as that $250 deduction. You may base 2020 refundable child tax credit and the earned income credit on preceding year's earned income. And then individuals who normally don't itemize can take up to a $300 above the line deduction for cash contributions to qualified charitable organizations. So it's also $300 for married filing jointly. So just some other things to throw at you. I know this was a lot to throw at you, but within an hour, again, we want to just make sure we get to you what's most relevant for the viewers. If you are looking for further information, we do have this page on our website you can check out. We update that regularly and as things come out. So, feel free to check that out on our website. We will be taking final questions, but here's my contact information. Here's Tim's contact information if you want to reach out to us directly. But with all of that being said, I know that was a lot. I'm sure we have final questions, but Tim, Jeff?
Looking pretty quiet out there, Jeff.
Yeah, I was going to say, look, such great information, such great detail. Really appreciated some of the guidance around taking the second round. And if you don't need it, don't take it. I think that was a pretty strong perspective that we captured. This webinar will be released in its entirety, so it'll be posted to our YouTube channel. And, obviously you can skip through if you had some specific questions that you needed to follow up on. We'll have this posted up tomorrow, the full webinar in its entirety in a post on businessjournaldaily.com. So I think with that, unless there's any other questions, we should probably wrap it up for today.
Last one just came in here. Are the PPP loans taxable to states? At this stage, it does not appear to be the case. It looks as though most states will just kind of accept what the federal government decides to do, and they'll base your state tax off of your federal adjusted gross income. Now, with that being said, that doesn't mean that can't change. There are plenty of states that make plenty of adjustments against your federal adjusted gross income. The wonderful Commonwealth of Pennsylvania, our neighbors over there, have got plenty of adjustments to federal adjusted gross income. Ohio has got some as well. So I think that the only thing to really hammer home here is make sure that you are working closely with your tax professionals, your CPAs, your attorneys, to make sure that you're taking these loans appropriately, taking these credits appropriately, recording your information correctly, and making sure that that you've got yourself covered for the future. So I've already seen plenty of people that have tried to do some of these things on their own, and it did not go well. And we came in and we cleaned up and we fixed it for them, and we got the loans for them after the fact when they reopened. But your professionals are spending every day doing this. So it's serious. It's a lot of money for a lot of you, and it's worth making sure that you're relying on those professionals to make the right decisions.
Absolutely. Great advice. Great advice. I think with that, we want to thank you guys once again. Always great information you provide, great insight. Please follow up with Tim and Angela for any other additional questions. We will have this full webinar posted to the website by tomorrow. And thanks for joining us as always. I think that concludes our webinar today.
Thanks for watching the video. Be sure to like, subscribe, and hit that little bell for notifications. And also make sure to connect with us on Twitter, Facebook, and LinkedIn. For all of your business news, visit businessjournaldaily.com. For all of your arts and entertainment news, go to afterhoursyoungstown.com.